Good evening, sir.
Yo, yo. All right, everybody. This is episode 52 of the Beef and Bitcoin podcast with your hosts, Brett and CH. Today's topics. Looks like TetherFud is back in the news. Cue the TetherFud, dump it. We'll talk about that and how you should not listen to the academics that come up with this garbage. Our good friends over at BitMEX had a little bit of an email leak disaster, potentially doxing all of their users. We'll get into that. And then I know this is going to be your favorite topic for today, the Robinhood leverage hack. Infinite leverage. So we'll get into that at the end and kind of wrap the whole thing together. But other than that, man, how have you been this week?
Yeah, it's going along. My whole week I've been just laughing at this whole Robinhood infinite leverage. We're gonna cover it last, but I've literally been crying, reading through this Reddit forum and just watching these videos. It has been an absolute disaster. I don't think people realize how ridiculous this is. Like retail investors leveraging. I did the math on one of them earlier. He did like 4K to a million, like 250 times. So I don't want to go over it too much now, but it was just pretty ridiculous that Robinhood had this big of a glitch in their app, and it was, as they said, open for 7 days. So pretty funny. But anyways, the TetherFud, I think we just need to rip this apart because again, it's like every time if Bitcoin price moves, the freaking media will just do anything to put a reason why, and that's not always why. There's sometimes they're right about. There's a lot of times it's just like the price went down because there's more sellers than buyers, or the price went up because there's more buyers than sellers this time, But they'll always throw random news at it, so don't get too tied up in the news here. But again, the Tether thing was basically saying a lone Bitcoin whale likely fueled the 2017 Sturge study finds, and this is a Bloomberg article, of course. That's a load of bullshit because, and I'm just gonna say it how it is, like even if a couple very high net worth individuals or groups or whatever were manipulating the price, there were still people that I've met before and just seen that were buying tens of thousands of, if not hundreds of thousands of dollars worth of stuff, if not more. And then when you take into the factor that how much the stuff went up in a short period of time, you realize if someone 10x's $100,000 to $1,000,000. So I don't really think that's the case. I think there's just a lot of retail buying, which when you think about, hundreds of thousands of people buying, $10,000 worth, that's going to add, into the market cap. So that's just my 2 cents on it.
Yeah, I mean, the first thing when you hear stuff like Texas academic and talking about Bitcoin, anytime I hear the word academic, I start dismissing it almost instantly, whatever is going to come after that. And I was reminded because I started listening to Skin in the Game by Nassim Taleb again, and he's basically has the best bullshit detector on the planet. And these people with no skin in the game really like to make false claims about stuff that they really have no idea about. And just as you said, you can immediately dismiss this because we were there in 2017 when, people you haven't heard from in years are asking you about Bitcoin and how to get some. So there was just so much retail FOMO, for lack of a better term, that was getting into the space. So that it wasn't one lone whale manipulating with Tether, and they were just printing Tether out of nowhere so they can pump it. I mean, Jesse Powell, the CEO of Kraken, was interviewed and had his own thing to say about this, where he was like, the amount of Tether increases as more and more US dollars are getting onto the exchange. And that's the precursor to the Tether printing press going on. It's dollars going into those bank accounts. And that's completely driven by demand for Bitcoin. And even, it was ICO and Shitcoin Central in 2017, and you needed to most of the time buy Bitcoin in order to move that to a different exchange, maybe convert it to something else so you could buy your shitcoins. I mean, you just had a lot of demand for Bitcoin, and we're talking about a minimal supply that was available on a daily basis that was being sold either over the counter or to the exchanges. So looking back, when I was living it in 2017, I couldn't believe the price was just skyrocketing so quickly. it almost didn't make sense to me, that pure euphoria. But then, as you know, as you and I have been recording podcasts just even throughout the summer and watching that pump to like 14K, I'm thinking to myself, there's absolutely zero retail new money coming into the space.
I didn't
This was
see that what we saw in 2017.
yeah, I didn't see it. I didn't hear about it. So I know that was just the people who were left over who had thought, okay, we finally capitulated. Like it's time to start stacking sats again and starting to take more positions. And you start to realize how very quickly the price can go up with not a lot of buying power. And I forget what the math is. It's like you only need $12 million a day of new money coming in to the space to keep the Bitcoin price relatively stable. You just take like 12 and a half Bitcoin times however many blocks there are per day and multiply that by the market price. And like, that's how much buying you need on a daily basis to support the price. And it's like, there's not that much, dude. That's like 12 million people buying $1 worth a day. And you know, even Cash App just came out with their quarterly results, and their new buyers were like doubled of brand new people buying Bitcoin, and they made a few UX changes on the app, and I really do like it. It looks good, but yeah, I mean, imagine 100 million people buying $1 worth a day, or even 10 million people buying a couple bucks worth a day. Imagine what happens to the price from there, and I'm sure we'll see more coordinated FUD around that whenever it happens. I don't remember when this article was released, but I wonder if it coincided with that dip. Oh no, that dip we had was yesterday. So this is a little bit before that. So I don't know. I don't like the coordination of, you know, Bloomberg, CNBC, and all this, and Investopedia like dropping. They literally dropped the Tether FUD article about the lone whale all within 45 minutes of each other. Yeah. I mean, it was just like perfectly timed. And then next thing you know, a couple of days later, the price dumps, and it's hard to say. Does that have anything to do with it at all? I don't know. Maybe. I can't imagine too many actual Bitcoiners who are selling or are reading that type of news, but you know, maybe they are. I have no idea. But I think it's just a good point to, like, when you see this kind of stuff, to me, when I see it, I'm bullish automatically. I'm like, okay, you know, that's what they're saying. Like, I know better in this case. And I think you really nailed it, that there was just so many, the retail adoption in 2017, just the people who were buying and buying and buying was just massive. And we haven't seen that again yet.
No, yeah, it was an incredible amount. Like, there was a lot of people, especially towards the end, as we talked about, like, that just hopped in. It was all in, baby. That's what it was.
Yeah, like, yeah. People, like November, December 2017 was like, hey, I have $5,000 I need to get in. Can you help me wire it to the exchange? Or exactly. Like that. Those are the kinds of typical conversations I was having.
No, 100%. It's the same thing. It's pretty interesting, but you know, here we are in, what is it, November of 2019, and it is, as we said, a ghost town. So
yeah, it's still very much a ghost town. You're right, and like that's good too. I think we might have a couple more months,
if not years.
Yeah, like we have time.
My I just, you know, my timetables for things now have just been extended. Like, as we continue to watch the equity markets go higher in the U.S. and even Germany's DAX at like an all-time high, and technically they're in a recession. Nothing makes sense anymore. Right, fundamentals don't. The perfect example of fundamentals not mattering is like was it PG&E or PCE?
Oh, the California Energy. Yeah, PG&E.
Yeah, PG&E. It man, they are. It is a shit show.
Yeah, I mean, here's the problem: is I'm going to end up bailing out PG&E. Like,
they went bankrupt, so they hit a low of like, well, the low was like $5, and the company. This is where like what I mean, like, all that matters is liquidity. It still rallied to $25, so you could have 5x your money in the span of like 3 months just buying the dip on when it fell from fucking $50, like insanity.
Yeah, no,
and it was insane. 73 in September of 20. That's insane, dude.
Yeah, markets are wacky. Things always take longer than we think, and
it's fucked.
So I don't know. There's like, there's so much time left, and that it just
like
is what
when you look at this, that's not a top. So it's like we could run here for a few weeks. I feel like like maybe I'm wrong, but it um, could get interesting here.
For sure.
Yeah.
Should we jump into that BitMEX?
Yeah.
All right, so this was really interesting. It looks like the community manager for BitMEX accidentally sent out, I guess, a typical weekly email that they send out, and he CC'd everybody on the list instead of BCCing. So now everybody who is on the list knows all the other people who trade on BitMEX, and they have all their email addresses. And a lot of people like to use Gmail for their email addresses, or even put their full name in their email address, which I don't necessarily have anything against that from like a professional standpoint. It's nice. You don't want to have like Bitcoin trader 69 as your fucking email address and like give that to someone to sign up for something. So like, I understand why people use their full name and stuff. I do it too. But if you're a US citizen or a citizen in a jurisdiction that is not allowed to trade on BitMEX, and you have your name and your email, you could potentially get doxxed. And that's pretty much exactly what happened in this case. And I believe the guy was like let go from BitMEX pretty much that day. And then it seems like he still had access to their Twitter handle and kind of pulled a quick one on him and was like, BitMEX has been hacked. Get your shit off the exchange. And the timing of that was pretty interesting because BitMEX withdrawals are like 9 a.m. Eastern Standard Time, I think, and he did it at like 9:02 or 9:03. So people were pretty much shitting their pants for 23 hours straight or 24 hours, thinking that they needed to get their funds off of BitMEX. So
yeah, no, I felt like there was a huge kind of worry this week that, oh shit, BitMEX is hacked. It is all over.
Right. So
and
it's like,
they have that insurance fund though, the BitMEX insurance fund.
No, and I really do like the BitMEX insurance fund, and I think that's actually it's just an interesting business model to have the BitMEX insurance fund. I think you're going to see more and more things like that in the future, and I do enjoy that. But just this whole email leak thing was a big reminder to me about taking your privacy a lot more seriously, especially when you're dealing with Bitcoin related stuff and email addresses. Like it might make sense to use a burner email address, create something just for one-time use. It's only for certain exchanges, or maybe if you're buying a hardware wallet and you need to put your email address in there, create a separate email account for it. Don't put your name in there. Maybe don't even use Gmail at that point. So that was just a big reminder. And also, as always, in the off chance that there was a BitMEX hack, like, don't leave your shit on the exchange. And if you're going to, just be aware up front that you might never see that Bitcoin again that you have on the exchange. And everybody has a different risk tolerance level, right? If you have 100 Bitcoin to your name and you're comfortable leaving one BTC on the exchange as 1% of what you have, then okay, like maybe that's what your risk tolerance is. And everybody's different, but I know that there wasn't an actual hack for BitMEX, so it's not a big deal, but just a great reminder to keep your shit like not on the exchange, use burner email addresses. But I'm curious, how bad do you think this is for BitMEX?
It's definitely a big fuck up. I'm just gonna say fuck up because that's what it was. Like CCing, and I remember seeing, as you mentioned, I remember seeing somebody on crypto Twitter say basically use a burner email, as you just said. Like you should if you anything with crypto or stuff like this, you should not be using a non-burner. I was gonna mention, like, I had one time I accidentally, like, I hopped on my phone to send an email to someone, like, that was like an adult, it was like for some like job or something. It's like a year and a half ago, and it was just like I didn't think about it and didn't check which account I was logged into, and I just sent it, and he was like, did you send it to me? I'm like, yeah, I'm sent to you. He's like, I don't see it, and then he like, I sent it from a burner address, so it's a complete random name, and I was like, oh yeah, that's the wrong email.
Yeah, I mean, I need to get better about doing the single time use emails, and I think actually Apple's making that a little bit easier to do, and I think it's funny. I don't know if this will be a separate topic one day, maybe as they come out with more info, but it looks like they're really pivoting to privacy focused, and it's interesting because I usually think
that lately.
like I usually think of Apple being a really strong, fast follower, right? So you see the HTC Exodus phone coming out with you can run a Bitcoin full node on it, and it has built-in hardware wallet infrastructure. You can secure your keys, like all that's great. I definitely don't see Apple being the first one to do that, and I'm sure she's gonna like. I'm sure Apple will be a fast follow there. If that catches on and there's demand for a phone with that kind of features, Apple will jump in. But in
Yeah, you
this
have to.
case,
It's sink or
right.
swim.
In
Yeah,
this case, I think Apple's ahead of the curve in terms of taking privacy more seriously. And I like that just
I
because
think
I'm not really.
there's definitely been a lot more awareness in the last few years when you think about like the Equifax incident and just a bunch of other big things where people are like, "What the hell is going on?" Um, and I think Liberty Blitz talk about this. Getting our data back. I think there's going to be a big push for this in the next decade. I think people are kind of. I think we're seeing a slow normie wake up. I think like the Epstein memes are kind of waking people up here. It's one of these things. But I did the math on this insurance fund, and it's 31,864 Bitcoin, um,
Yeah, that's a
and
shitload.
it's 280 million roughly at $8,800 in price.
Right. So there's a couple things about that. One, my guess is BitMEX probably can't get their own insurance. I mean, I work in the insurance industry for a living, and trying to provide insurance coverage for something like Bitcoin, which you'd have to treat it as like money and securities or property, it's just almost impossible to insure. And I think these insurance funds are going to be the way to do it, um, because like you need to save for those losses in the off chance that there is a hack. And I'm sure, I mean, BitMEX seems fairly secure except for this fuck up with the emails, which like really sucks. Uh, it really sucks for their users, especially ones who are using BitMEX in a jurisdiction where they like can't use it. So you have to now hope that you're not on your jurisdiction's radar in terms of trading on that exchange. So it just, again, with the privacy stuff, like take it more seriously than you would otherwise. Like, I hope that Bitcoin helps. It helped me take my security and privacy a lot more seriously. And it's not the, well, if you don't have anything to hide, what do you need your privacy for? It's not really that. It's more all of a sudden, let's say Bitcoin moons again, which it will at some time in the future. All of a sudden, you're a target if somebody gets a leaked list that you were trading on BitMEX and you had 10 BTC to your name, and now it's worth 100 grand each. Well, now you're a target because somebody knows they can come and beat the shit out of you and take $1 million worth of Bitcoin, right? So it's like little stuff like that where you need to think 5 or 10 steps ahead about taking your privacy more seriously.
Yeah, privacy is it's becoming a bigger deal, and I think I just mentioned, I think there's a giant awakening. I think a lot of things are making people see giant flaws in our current system. Whether you talk political, monetary, there's a lot of things people are looking at. Even our current economic system. Some people pay taxes, others don't. You know what I mean?
Right,
So
right.
it's I think soon we'll find out. Especially this is next year. I mean, it's like 360 days or 65 days to the election, whatever it is right now. Might even be less. Um, it's gonna be a very turbulent year. I don't see it de-escalating at all. Like it hasn't de-escalated since the previous election. Think about it; it's only gotten worse.
Right, it never really slowed down. Yeah.
Yeah, literally, we didn't get a break. There's no fucking just full on, and it's like how much longer can we carry this on? I don't know. It'll be interesting. I'm
You
pretty
wanted?
pessimistic, but you ready to go into retard leverage? Yes, I'm ready to talk
Yeah,
about
let
autism.
all right, let's jump
That
in
don't take
there.
that personally. That's just what they talk about in this. It's like the Autist Hall of Fame. I think they might change it to Go, but it was the Autist Hall of Fame. One of them has it all posted. I've been kind of reading through this all week, and basically, this I think it started out the first guy who actually figured out this glitch or publicly showed that he figured it out was his name on YouTube is Metroman09, but his name on Reddit is Control the Narrative. And so when you look through this, and I've been laughing this whole week. This Reddit Wall Street Bets. There's a bunch of people saying CTN, and I didn't get it, and then I realized because this whole thing had blown up, and I kind of just stumbled onto this Wall Street Bets page. But I'm gonna play the video here quickly, and you should be able to hear it. But if you can see, it's pretty funny too. It's basically, I'll just give a little quick background. He is recording the screen and also has a selfie camera recording his face. He's in a car, presumably riding in the front passenger seat, and it's 9:29 a.m. Eastern Standard Time. So the market is opening up in like 10 seconds. I fast forwarded it to where his former portfolio that was up. He took basically $2,000 and leveraged it into 50 grand. So he gave himself a 25x leverage, a mere 25x. And he was up over $6,000, basically $7,000 from the previous day on his option positions, his put options on Apple going into earnings. And I'm just gonna play the video now. I don't know if you could hear it. I know you could hear it, but you might have seen the video already. Just the soul leaving the body there as his options become worthless. So, and
So how much did he lose in a couple seconds there?
I'll just fucking scroll back. He went from 57,000 portfolio value, 47,684, to -2 to 10,000. And it just gets worse. It's just the video gets worse though, because you can see Apple's price kind of going around. But so basically, what's going on is like options premium will just like implied volatility plays a huge role into it, and like you'll see like options on stocks, calls and puts alike before earnings will not like since the implied volatility is heavy because earnings can make stocks jump 10-20% or dump 20%. The premiums will be really fucking high. And if you're on the wrong side of that the next morning when it opens and they announce good earnings or whatever, you get screwed like this. And I think like you just watch his portfolio just dwindles to like red at the end. it gets worse. I shouldn't be laughing, but it says a -100,000 is what he owes.
That's insane. Yeah, you're wrecked. I mean, absolutely wrecked.
Margin use. So negative portfolio, -40,883. And that was just one of them. There was numerous occasions of this. Like there was someone who leveraged. I had it open earlier. Basically, $2,000 into. So I'll explain. I don't mean to cut you off there, but I'll explain how this happens. So people are using Robinhood's margin, which you have to have like gold account. I don't know if there's anything higher than that, but there's a gold account. You have to have $2,000 on there, so you can instantly transfer up to $2,000. So people can instantly transfer $2K. They can then margin to $4,000. So what they do is they buy like $2,000 in AMD stock. So the initial like thing they did was they stopped people from buying like deep in the money covered calls, basically writing, and because they would own the AMD stock and then write deep in the money calls, and what would happen is, since the platform had a glitch where it counted the deep in the money covered calls as cash. So like
right, all the premium that you'd get from selling the covered call.
Yeah, so and then his margin went to, it doubled, and then you could just keep infinitely doubling this. And that was the thing about being infinite leverage. It wasn't just like 100x like on BitMEX or 200x or some ridiculous leverage there is on some of these Forex brokers, but it was like infinite. Like people were leveraging to 500 times. Like, which, like this guy. Oh god, he finished down -190,000, and like so, Robinhood just has to cover this money. Like they owe it. Like I don't know if people get in trouble, but it's.
I'm sure. I'm sure some of these people are going to be filing for bankruptcy or something.
Dude, if I won't be surprised if I'm at -200K by the end of the year.
That's insane, dude. I guess before we go any further on this is a good time to tell people to be extremely careful when you're trading with leverage, and especially So I don't know, not too many of our listeners are outside of the US, but those of you who are trading on BitMEX, be very, very careful when you're doing so. I think Kraken offers 5x leverage, which is
It's
it's still
still a lot.
it's
It's
still a
still a
lot.
lot. No,
Like,
people don't realize. Like,
yeah,
here's the thing: 5x leverage. How many times have we seen Bitcoin move 20% in hours or
a,
less,
a lot. Like
in
it
up or
happens
down,
more often
both
than you
ways?
think. Yep.
So you could be 5x leverage, and if the position moves 15% against you, you're down 75%. Like,
Right, you're just out instantly. Boom, you get liquidated, and I mean that's what we saw the other day when Bitcoin pumped like 40% in a 24-hour span, because the price dumped, people got liquidated, and then it just fucking skyrocketed, and that happens all the time, and maybe it's people hunting for stop losses or whatever, but it's just
stop loss hunt.
like I don't know. Like at this point, I don't even trade anymore because I know you need to be in the top 1% of the 1% to like really have that edge where you're absolutely crushing it. And I know that that's not me. And I've seen just people get wrecked with leverage, and like it's just it's insane.
I'm sorry, I had a. If you haven't had a chance, I know it's a little off topic. The fucking WeWork uh, turnaround, basically, their like PDF or for their court. I don't know what it was for their quarterly report. It's fucking hilarious. It's like you wonder who made it. Like you look at these things. This is like the only thing that's added in here is the stonks, dude. But like the slide is literally this hypothetical illustration of EBITDA, WeWork, turnaround. So it's like current is just fucking on a deep slope. WeWork is a shit show right now. Short term assets, long term fucking liabilities, they're absolutely dicked. And then they just draw a turnaround with a giant arrow. Aim to achieve turnaround. And then there's some very small font that I can't even read. But it's basically saying, hey, this probably won't happen.
Yeah, I mean,
It's like
and
an
this is just a good example of
free
what
money.
happens
When
in
you
a
have infinite,
fiat monetary. Yeah,
when you're fucking Mayoshi Son and you have infinite leverage, this is what happens.
yeah. I mean, it's just a complete disaster of like the current monetary system that we have, where like this kind of stuff happens all the time. Especially like WeWork's a big example of malinvestment that will be
No one,
studied for sure,
oh, for
and
a long time.
yeah, Bitcoiners will talk shit about it forever. Anybody who's
No,
kind of like a sound money guy or has anything knows anything about Austrian economics. Like this is your main example of a business model that doesn't work, um, and you just can't keep throwing cheap money at something hoping that it's going to turn. And then you get things like this where it's like a literal turnaround. Like this is how we're going to be cash flow positive, and like everybody knows that's not going to happen. But what happened to SoftBank? Didn't they lose like $4 billion on
they
this
lost like
so far?
six. Well, they lost six
Yeah,
billion between like Uber and WeWork.
yeah. I mean, it's hard because you can look at them and understand how you would think they would be good businesses. I use Uber all the time. I love it. They don't make any money, but I enjoy using the service. It's not that. Either you figure out a way to be profitable, or you don't, and then the company then shuts down, and somebody else will figure out how to either make it more efficient and profitable, or it's not a viable business model. And you have the same thing with WeWork. You can't divvy up a couple of floors of a building to like startups who are like very thinly funded as it is on their own, like really shitty
It's
business
dude,
models. Like it's just
it's
it really
no
doesn't
one looked
work in
into it.
the
People were
grand
just throwing
scheme.
money at
No,
it. That's
right.
literally what
And
happened. It's
it's a complete fiat issue, and it's why it's like we like talking about it, because you wouldn't have it otherwise, right? It would just be impossible. You wouldn't have these severe examples of malinvestment in the marketplace, and it blows my mind, but honestly, not really.
uh, I mean, we already had the dot-com bubble. We went through crypto, and so it's like, I mean, crypto's a perfect example of malinvestment, just money fucking shooting at this thing.
Right?
And
No,
now
it,
that
it
we know,
really is.
basically, now that we know, and it makes sense with the coinciding of the CVOE and CME opening their exchanges with the Bitcoin drop, that it definitely was viewed as a threat, because what if the sim became worth $1 trillion? What was stopping it from going to 2 trillion? Nothing. It was
No, right,
pure
right.
just people just fun, going crazy. And so we do have a new update on the Fed balance sheet. It's currently at 0.039 trillion.
There we go, back above 4, just like you said.
Yeah, well, we hit it last week. We hit it the last week in October. We hit it, so we hit it at the end of October. We're going up, and like it doesn't look like much there, but you zoom out, and it gets pretty fucking steep.
Right.
We're going vertical. Like, so we're talking now, like probably like end of January, we're gonna have a new ATH here, like over 5 trillion.
Yeah, it could happen really fast, honestly.
Is this like? Do you think this is basically them just reacting right away and just saying? But like, so much money. I don't mean to cut you off there, but so much money, and we're barely making new highs too.
Yeah, I think you and I have been talking about that a lot. It's sure S&P 500's making new highs, but it's like barely making new highs, and you have a ton of additional liquidity being pumped into the market, whether it's via the repo facilities or whatever. It's everybody knows something's up, and I think we're going to talk about this on another episode. Even like Ray Dalio came out with this whole kind of open letter talking about how the economic system is broken, and he's not wrong about it. But I think it's funny because I was watching a talk from Murray Rothbard last night on YouTube, and it's funny because I think it was recorded in like 1980 or something, and you could watch it today and think he was still alive talking about what's going on today. I mean, it was just everything still made a ton of sense, and they were talking about basically printing their way out of these recessions, and I don't know what I think, if they'll print enough or they won't print enough. I think they're going to need to print more than they think that they do to actually steer the ship away, because he was mentioning like there's always a lag time because of the bureaucracy, right? So you have jobs numbers that come in, or GDP numbers, economic forecasts, you have earnings reports, and you start to see the global economy start to turn, right? And you and I have been talking about that for the past couple months, and all that information needs to make its way to the Fed, and then it takes the Fed how many months to decide what they're going to do about it? Call it 6 months. Yeah. Now you're a year out, and then it might take another 6 months for all of the money printing to then work its way back into the economy to then try to steer us out of the business cycle. So now you're looking at 18 months, 24 months of trying to steer the ship back on a path where everybody doesn't lose their jobs. So don't get me wrong, they've been successful. They did in 2001, they did in 2008, although they've arguably just made it a lot worse, and they've spread the inequality gap like substantially because of this, of not letting the business cycle run its course, right, and kind of wash away all the malinvestment so that everybody can start over.
It would have been shitty. Like, I'm not saying it wouldn't have been shitty if they didn't do anything. It would have been really shitty, but
for a shorter period of time,
things would be so much different now. Right. Yeah, and it could have been 5 years, but it would be completely different instead of it was like the recession was happening and then rebound. And it was like, what?
Right.
Like, I remember that, and I was younger, but still I kind of remember it was like, it's kind of interesting. This whole thing happened. I didn't understand at the time, but it was like a big deal. And then it was like, oh, it's over. People in I remember it was like, I was probably going into high school and shit. And like, it wasn't as big of a deal.
No, I mean, when I was graduating college in 2011, that was still like 2008 was still in the back of my mind. Like, not a lot of people were getting jobs. I was lucky. Like, I had a job just going out of school, but literally nobody else in my class that I graduated with had jobs lined up at all. Like, literally nobody. So it was still not good, 2.5, 3 years later. Mm-hmm. And it still wasn't good until 2013, 2014, it turned around. So it's a long time to like steer the ship back. And in hindsight, you could be like, oh, it wasn't that bad. I mean, don't get me wrong, it was fucking bad, dude. A lot of people lost everything.
I mean, completely completely wiped out. When we think about like a lot of people that worked at like the big companies, like the IBMs, the GEs, the Fords. Yep. That were just hit ridiculous market highs in the 90s. Were invincible. The U.S. was the lone superpower. Russia had collapsed. Except USSR, Soviet Union, and it was Pax Americana, and nothing it could go down. And then these big names like GE was the largest market cap in the world in like 2000, and that got chopped fucking absolutely, it was more than half, got destroyed, kind of rallied back, and then got destroyed again in '08 to just abysmal numbers. You know what I mean? Like people lost everything. These people held from. I'm just gonna open the chart because it's worth showing like how. Like yeah, so a high of $57 and held down to fucking $6 in the recession. So I mean, people
Yeah,
lost everything. I think you
right.
mentioned that one time on our podcast. A family friend.
Yeah, one of my roommates, I want to say his mom worked for Ford for, I mean, her entire career, right?
Oh yeah,
And she just, I mean, she really did lose everything and was getting close to retirement when we were in college. And like, you can imagine you put so much into your either your pension or your whatever kind of tax advantaged program that they had for you, like stock options and stuff like that. And all of a sudden, maybe she had $1 million saved up working there for 35 years,
yeah.
and that
No,
turned
seriously.
into 50,000 or 100,000. Which, you don't get me wrong, that's nothing to shake a stick at, but you had $1 million in there.
Yeah, and
And
that's
like you worked your whole life for it, and now what are you gonna do? Like maybe she sold the top of the like not the top, but maybe she sold in 2014 or 2015, but like I doubt it, right? So you still have these people who thought they were going to retire with seven figures and they would be able to take care of their family and whatever else and live a happy retirement,
and
and now they're
just shit. I
not,
mean,
right?
well,
And
think about this: like highs of $37 and down to basically $1 at the low of the recession. And it's like think that's you know even if the position was if you had $37 million position, it's fucking worth nothing. If you had $100 million positions, we're still worth like what $1 million then.
yeah,
Yeah, a couple $1 million. Like so it doesn't completely absolutely wiped out. I mean, and you can see it even after you wouldn't want to sell. I mean, shit, if you went from $1 million position to or in by the September of '02 from the highs in July of '99 down to the lows in September of 2002 there, and you go down to $7 there, you just lost a quarter, if not more. You know what I mean? Or excuse me, you had a quarter. You have
three
20.
quarters.
Yeah, I meant to say you have 20% left, but yeah, you said it
Yeah,
there. Yeah,
no,
so you lose
you
80
get wrecked.
80% gone. So
Yeah.
there's your million to 200,000, and then you don't want to sell there, and then it goes to like 80 grand at the low or 50 grand. You know what I mean? So it's like that's
Yeah.
it's terrible, man.
Now, thinking about it, I kind of heard someone talk about just investing and passive investing and how a lot of that, like, it sounds good in theory and it can be more scammy if it doesn't end up working out for you. But I think his point was like the best thing you can invest in really is yourself, and having a skill that's valuable, whether
Yeah,
that's
100%.
whether you're a developer, whether you're a welder, whether you're a carpenter, like or a bartender, like it really doesn't matter. Like you just need a skill that can make you as much money as you can possibly make, and that's like the most important thing you can have, because um, this person thought that being in Ford was maybe the safest investment you could possibly be in. Like no one would ever tell you, "Oh no, yeah, Ford doesn't seem that unsafe. Why wouldn't you put a decent chunk of like your life savings into it?" That they make cars every I see
And
F-150s
you
on the
can see
road
here,
every
dude, in
fucking day.
'97 how vertical it went. I mean, when you
Yeah.
look at it in hindsight, you're like, holy shit, it went from $12 to 37.
Yeah, I don't know. It's hard because when I see stuff like that, it's easy to look in hindsight and
Oh,
say
it's so
like,
easy.
how did you not sell, right? How did you not take anything off the table? And it's funny because one of my coworkers, I he had bought GBDC like in the $8 range, and he ended up selling it at like 11.50 or 11.75. Like he crushed it. And I like couldn't believe that he sold. And but then I'm thinking to myself, I'm like, well, you know what? Maybe that was kind of like a good move. Like he's been trading longer than I have. He's been investing for way longer than I have. Like I
Yeah.
think he
And
can
if it
he
was a
can
good, like, if it's a good
smell
sized
like these
position,
pumps. Yeah, like he can smell these pumps and like whereas I haven't lived through enough like really strong investments where like I was really feeling that fucking pump, to know like, okay, this isn't going to last forever. You need to understand either when to scale back or like take profits. Like I don't know. It's hard, but now I'm to the point where like I know I'm not taking profits on anything because I don't want to deal with the headache of the fucking tax liabilities for selling BTC. But I could see why you do that with GBTC and a tax advantage like Roth IRA. Like, okay, yeah, if you want to trade it, you go for it. Like, good luck, best of luck to you. But with any of this stuff, and it's just a good reminder because we're going to see this kind of thing happen again with the Bitcoin crypto space. Like I have no doubt we'll see the craziness, right? So it's a good check. Like we can check each other to make sure like that you can just see this coming. I don't know.
Yeah, no. We are in interesting times to say the least. I like I said, I know we talked about it earlier, but the whole election cycle coming up is just going to make everything just so much more tense than it needs to be.
Especially with the even outside of the political stuff, just the financial markets in general. If you think of that as like,
and it's not just the U.S. There's a lot going on in terms of just
right.
Like we talk about Hong Kong, Venezuela, like just in the past year, Chile now, Spain, France. Was it Belgium or is it the Dutch? Who is it who has the tractors, the farmers?
I think it was the Dutch. The Dutch.
Yeah, dude, it's absolutely insane. It's mind-boggling. It's all happening. Different places around the world, different, governments, whether dictators, democratic, whatever.
Anything, yeah.
And it's happening. So.
I don't know. I think that's a good way to wrap it up. This is a good episode to jump back into.
52, right? Was it number 52?
Yeah, this is 52. All right. Well, thanks for checking out episode 52 of the Beef and Bitcoin podcast. Make sure to like and subscribe. Leave us a review. Send us your comments. Either leave them on YouTube, send us DMs, let us know what you want us to talk about. Always helps us to prepare for these shows and give you guys what you want. All right. Thanks for listening.
Peace.